Hey traders, welcome to this week's Forex trade planning session where we're going to look at the opportunities it could be setting up in the FX markets for the week ahead. And of course, we're going to look at the US pairs and look at how they're going to fare off the back of Fed Chairman Jerome Powell's comments last week about them continuing to be aggressive with interest rates going forward. Before we get into it, I just need to remind you that everything that I talk about in these videos here are my own analysis. They're my own opinions on what's going to happen in the markets for the week ahead. Obviously, you can use this as a basis to sort of like develop your own trade ideas, but you still need to do your own analysis and your own due diligence before you take any of these trades, okay? So with that being said, let's now jump across to the charts and let's go through the pairs individually to see what could be presenting itself for the week ahead. Now, we'll start off by looking at the Aussie CAD. The Aussie CAD here, as we can see, has been in a downtrend. It's been pulling back for the last month or so. So since sort of mid-July, you can see that it made a low at 0.8737. It's then pulled back since then. It threatened to sell off a couple of weeks ago. And then we kind of had a little bit of, a bit of a pullback, bit of consolidation. The market then last week, and particularly on Friday, then sort of gave us a bit of a bearish candle there, and it looks like the market might start to sell off from here. So what I'll be waiting for in the Aussie CAD is for a nice bearish momentum candle to take us through the low of 0.8946. So this candle here, the previous daily candle, and if we can get that, then I'll be looking for a shorting opportunity. Again, I'm going to be keeping my stops tight, so I'm not looking to hit home runs here. We're just looking to be in and out of the markets very, very quickly. So, by keeping our stops tight, we're able to take a larger position size. So it's a little bit more aggressive in terms of risk, but it does also then mean that in terms of our profits, that's going to be larger too. The next one that I'm looking at is the Aussie New Zealand. Well, I say looking at it, I'm actually already in the Aussie New Zealand here, but it is one that, I think if you weren't already in it, it's something that you could consider. I actually took this last week off the back of this momentum candle here on the 19th of August. So on Monday of last week when the market broke through the high, I got long. I spent a lot of the week sort of just below these lows here. Perhaps I could have waited for the market, highs there. Perhaps I could have waited for the market to break through those highs before getting involved in the trade. But, it did give me a little bit of profit. The market has since broken through there. It looked like it was going to hit the profit target last week, but then sold off a little bit towards the end of Friday's session. So hopefully when it opens Monday, we'll be able to get there, be able to hit our profits. If, for example, so what I'd be looking for if I wasn't already in this trade going into next week is I'd wait for the market to maybe, rally a little bit more, then pull back a little bit. And then after that pullback, once the market confirms that it trades above these highs here at the 1.1178 and then gives us a bullish momentum candle, that would be my opportunity to get in there and to look to get long. If we look at the Aussie dollar, so the Aussie dollar is moving in the opposite direction. Obviously, this is a lot going to be based on the comments from Friday. So obviously with the US saying they're going to be aggressive with interest rates, that's going to mean that, there's going to be a high yield there, high interest rate differential there with the US dollar if they continue to hike rates as aggressively as they already have, which means that we're going to see some dollar strength. So with that, with the Aussie dollar here, we can see that the market sold off very, very aggressively. This is actually a good opportunity to get short even here. But if you're feeling a bit more conservative, what I would look to do is wait for the market to break through the 0.6858 level, so this temporary level of support. And then once it gets below that level, then look to start becoming a seller. I wouldn't put my stop all the way above at these highs here at 0.7145, even though that might be the temptation, that being the swing point. As I spoke about a little bit on last week's video, and I saw a comment beneath last week's video asking to talk more about stop losses, which I will do this week. So I'll do a video specifically specifically for that. But essentially what I'll be looking to do here is keep the stops tight, so wouldn't really put it any further than this candle here, the 0.7017. Okay, so you can see that that's sort of like 120 pips below where it would be if you put it at the swing point, which in turn is obviously then going to mean that if you're going for a one-to-one reward to risk or whatever, you're going to have more than enough time to be able to get that, and it's going to get there quicker. You won't have to go for another 120 pips. You know, let's say, for example, we were to get short below 0.6852 in and around that area there. If I pull in this ruler here, if we take a look at the difference, so if I got short there and my stop loss was above the swing highs, that would be 290 pips. All right, so for a one-to-one reward to risk ratio, what you would then have to do is you'd be looking for the market to come down towards 0.6555 in order to take profits. Whereas if we keep, there's still a proven place to put a stop loss, and I call it the two bar high or 2 bar low stop loss. If we put it there at 171, to go to 171 on the downside, you can get there before we even get towards these lows over here. So the market doesn't have to do anything extraordinary for you to be able to make profits, which is really, really important. So as I said, what I'll be looking to do is to get short once the market breaks through that low there, stop then above the intraday highs, and then look to take profits relatively quickly before it gets to the low. Which is essentially what will allow us to make more consistent profits. Sure, you can swing for the fences, you can get bigger profits if you do it that way, but the problem is that then your win rate comes down, and you want to have a nice balance between obviously your risk to reward ratio and your win-loss ratio, because even though it may look sexy on paper to have a greater reward to risk ratio, if you have a lower win rate, most retail traders wouldn't be able to stick to the system well enough to be able to see that play out. And so it's more profitable on paper, but in practice, it probably will just end up losing you money. Okay. So moving on to the franc yen. So this is the next one. I'm waiting for the market here to break through these highs here at the 143.815 level. If it can do that, then, and we get a close above that level, then I'll be looking to take this long. Again, stop will go behind the 2 bar low, which is at the moment just around this area here at 141.21. We can see that the market is in an uptrend. It's tracking way above the 200 moving average, just in there with the 20 period moving average, which I like to use as a momentum indicator. So if the market's above that particular moving average there, I know which direction the momentum is. And then obviously the 200 period moving average being the thing that gives me context from a trend perspective, because the long-term trend and the momentum are kind of two separate things. You could have an uptrend, but you could have downwards momentum. The ideal situation is where you end up taking a trade where you've got momentum moving in the direction of the overall trend. And this is what this allows us to do here. The next opportunity is the euro yen. So last week we were talking about perhaps the market breaking through this trend line here. It hasn't done that as of yet, and it is looking like potentially it could break up. So the next situation we've got on our hands here is to put in a horizontal line of resistance over here at 138.49. We'll say that if the market breaks above that level, so if we get the momentum candle above this level, close above this level here, then we can be in on the very next day on the break of the high of that candle, looking for the market to push up towards these highs. Obviously, the same remains true as we spoke about last week. If the market gets below this trend line here, then we can still start looking for a shorting opportunity, perhaps on a shorter term time frame. The next one is the pound dollar. Now the pound dollar here, we can see the week before last, it sold off quite aggressively. It then hit the lows here and then moved sideways for a little bit, which is completely expected. You never really expect the markets to get to a low and then break through immediately. There's always going to be a little bit of resistance there, or a little bit of support in this case, because it's to the downside. But eventually, obviously, it will get through there. So this sort of price action is absolutely to be expected. It doesn't mean that it's going to completely turn around there. It could do. But what I'm expecting here is for the market to break through 1.1713 and then obviously move on towards new lows. I would place my stop above this little congestion area over here. So around the 1.1918 level. which gives you, you know, quite a tight sort of stop loss there. But then again, as I said previously, you don't want to have your stop too far away. There's an expectation when you do get into a trade that you're getting into the trade because you think the market is going to move. If it doesn't move immediately in your direction and you're trading at a key level, then there's something kind of wrong with the trade. And there's something that you need to take a bit of a step back and say to yourself, well, is this the same trade? Is this, you know, the reasons I got into this trade, are they still there? And most of the time they're not, which is kind of why you don't want to put your trade all the way back at these, you know, the extreme highs, then when you could have it a little bit tighter, which allows you to be able to take profits and tighter as well and still maintain a good reward to risk ratio. The next trade is the New Zealand dollar. So obviously you'll notice here Aussie dollar, pound dollar, New Zealand dollar, they're all very similar trades, and they're all going to be off the back of what the Fed were talking about with interest rates last week. We have a big data week this week. We've got the ISM coming out on Thursday. We've got the non-farm payrolls on Friday as well. So they have their potential market movers, but I still think that there will be movement before then. Okay, particularly off of the back of the comments on Friday. The markets need to digest it, and then they're probably going to give us some nice volatility. Now, the New Zealand dollar it's already broken through the low. So really what we want to see here is the market pull back a little bit. And once it pulls back, we'd like to take a sell through the 0.6137, which is the low of this momentum candle on Friday. Stops again will be just above the highs. So keeping it sort of relatively tight there for reasons we've already spoken about, and then wait to see that the market then goes on to hit profit targets. Now, the pound dollar, the Aussie dollar, and the New Zealand dollar, they are the same trade, okay? So don't go in there and start taking all three of those trades at the same time. The likelihood is that they are going to move more or less in lockstep. So if you take all three of them, you're just taking on additional risk for no real benefit, all right? Next ones are the dollar franc. So the dollar franc I've actually been in this trade for a little while now. I got long here at 0.9574. So I've been in this for a little while. It kind of looked like it was doing really, really well. I then spent Tuesday, Wednesday, Thursday of last week just moving sideways, which is a little bit frustrating. But if we do get a breakthrough the highs there, one, I'll be able to take profits on my trade, and two, that will give us another opportunity there, another momentum candle to trigger a second trade there. So if you're not already in that would be a good opportunity to get long. You know, we've got the rejection of the 200 period moving average. We've got the previous level of resistance over here, which is now acting as support. We had the market try to break through support. It didn't manage it, and now it's trading back up above, one of the trades that I love. And if we then get a move between or above this level over here after the sort of like the attempted break up, this downward sloping trend line, then we have so much going for this trade, both technically and fundamentally, that this is actually probably one of my favorite trades going into next week if it triggers. The last one is the dollar yen. Again, all of these are dollar trades. So pound dollar, New Zealand dollar, Aussie dollar, dollar franc, dollar yen. It's all the same trade, right? So essentially we're betting and we're trading dollar strength in all of these. So do not take all of them at the same time. I repeat, really consider that. You don't want to be in correlated trades. It makes no sense whatsoever. Yes, sure. You can sell yourself on the theory of, if I take all of them and they all go to hit profit target, then I'm going to make money. Yes, but it's a double-edged sword. If they all go to hit your stop loss, then you're going to lose on all of them as well. Okay, so the way that I would play is I would either, maybe pick my two favorite setups and split up the position sizes. So go half and half in each of them, or just go on the first one to move and kind of see where that takes you. But this one here, dollar yen, again, fundamentally, this is actually a pretty good trade as well. If we can get a break through these highs here, 137.71 could then take us in there, and we could probably get out almost at the highs. So it doesn't look like we've got a long way to go for the highs, but it should give us roughly enough room to be able to get in and out there for a one-to-one reward to risk trade. So we don't need the market to go on and break new highs for us to be able to make money on this trade, which is one of the things that I love. Now, finally, that's it for all of the currency pairs. But in the Facebook group, I asked some of you guys, or I asked the group, if there was anything else that you wanted me to analyze. And the only thing there was the indices, and in particular the DAX. So the DAX here, as we can see, has given us a big bearish candle on Friday. If that starts to follow through on Monday, then that would be a great shorting opportunity. Of course, you need to pay attention to the lows at 421, but really and truly looking at this here, the trend is to the downside. All right, there are problems in Europe. There's problems around the world at the moment, so we're not expecting any of the stock markets to rally aggressively anytime soon. And if you have to sit there and put a gun to your head and say which way do you want to trade, it really would be to the downside for all of these markets. So looking for selling opportunities in the DAX would be the way that I wanted to play it. However, if you are looking to get into trading, you're not already in one, I would actually go for one of the US indices. So like the Russell, for example, over here. The reason I would do that is that if we look at the DAX, so let me jump across to the DAX. So you see the DAX, there's already a lot of sellers involved in this trade because it's already pushed it down quite a lot. Whereas if we look at the Russell, or we look at the Dow Jones, or even the NASDAQ, they're all kind of coming off of recent rallies. So that's a lot of buying pressure there, a lot of people taking profit. So just the position, the context that you would be taking these trades from, I think that, you're not trading directly at the lows there. So from a reward to risk ratio perspective, they would be the ones that I would be more interested in. So yes, the DAX is definitely selling off. Yes, I definitely believe that it's going to go lower. But where is the better opportunity? I believe that that's in the Dow Jones, the Russell, or the NASDAQ. They're all showing, almost carbon copies of each other. So you could take any single one of them and they would look the same. But I just think that from a technical perspective, they look better than the DAX at the moment. And then obviously, if you're talking about the FTSE, well, that one there, is kind of in the middle of consolidation. So I wouldn't really touch that one for the moment. Yes, it's probably going to go lower. It's sold off. But generally speaking, the better opportunities are in the US indices. Okay, so that wraps it up for this week's Forex trade planning session. I hope you enjoyed it. If you aren't already subscribed, please make sure you subscribe to the channel. So go ahead and hit that subscribe button and also hit the bell so that you get a notification as and when I release these. And particularly with these sorts of trade planning sessions, I'm going to try to put some out in the week as well. You're going to want to get that notification because you're going to want to get the information on what trades are setting up and what I think is going to happen in the markets as quickly as possible. If you watch this video in 3 days' time, for example, it's already going to be too late. Some of those moves may already have happened. Okay, so thank you so much for watching this video here. I hope you enjoyed it. Please feel free to post a comment beneath the video like you guys did last week. If there's anything in particular that you want me to talk about or analyze for you, let me know. Otherwise, have a fantastic week in the markets, and I look forward to speaking to you in the next video, which actually is probably going to come sooner than the next week's trade planning session. I'm going to try and put a few out this week as well. Okay, take care now, and I'll speak to you all soon.